Indian stocks saw record withdrawals last month. Still, foreign investors are seeing possibilities in the country, which bodes well for some industries. Our cover report focuses on the sectors to watch out for.
India's benchmark blue chip index, the Nifty 50, marked back-to-back monthly losses in November for the first time since early 2023. This is a sell-on-rise market, or what traders widely call profit-taking trades. Thursday erased much of the gains made recently. Still, international funds are investing strongly in certain sectors. According to data from the National Securities Depository Limited, industrial, healthcare and telecommunication stocks have each had net inflows of around $3 billion this year. That stands in stark contrast to the massive selling in October, which resulted in withdrawals of over $2 billion in Indian stocks. Global funds have retreated from sectors with weak growing prospects, such as banking, consumer goods and energy. These sectors are expected to be the market stragglers in 2024. Ritesh Jain, founder of Pine Tree Macro and a global asset manager, said, overseas investors are waking up to the fact that they own yesterday's winners. He added the government's priorities clearly lie with investment-led growth and not consumption. Telecom companies are reaping the benefits of a price hike as fierce competition for consumers eases. Infrastructure corporations have seen their prospects improve thanks to India's initiatives to encourage manufacturing. However, over $8 billion have been pulled out of financial stock markets this year due to worries about valuations, asset quality and shrinking margins. Sluggish urban demand is hurting consumption-related sectors, while energy shares have been hit hard by poor refining margins. Global funds are shifting their attention to new market leaders. Manish Jain, director of the Institutional Business Division at Mirae Asset Capital Markets, said, banking has been over-owned and tech stocks are under-owned. We are seeing a sectoral churn play out now, and it's likely to continue. According to Jain, foreign investors are trying to figure out which parts of India's economy would be able to weather the current cyclical weak spot. He added that foreign investors are keeping an eye on how different parts of the economy would be affected by Trump's trade policy. Valuations are a big concern, with Indian benchmarks trading near their historic highs after hitting multiple records this year. Foreign investors seem to be betting that segments with higher earnings growth may be able to justify their expensive valuations. Business Bureau WION World is One.
Ajay Bagga is a market expert and is now joining us live from Mumbai. Mr. Bagga, thank you very much for making time for us. What's the outlook for Indian stocks as the year comes to an end, and what are your predictions for next year?
Yeah, the projections are good. What have been the drags on the Indian stock market, as your segment was mentioning, that foreign investors have been sellers consistently. And the reason for that has been slowing growth, slowing corporate earnings growth, as well as elevated valuations. And this kind of outflow has been seen for most of the emerging markets, because the Trump trade has been a strong dollar and flows going into the US stock markets, which have been consistently hitting all-time highs. So India has been part of the EM outflow, the emerging market outflows. For next year, what we are forecasting is some amount of respite on the inflation front. RBI, the Indian Central Bank, coming in with rate cuts. Third, we expect that the government spending will catch up. From November onwards, we will see better government spending. This year, we saw 4 months of indecision and inaction on the government's part because of the national elections. So from March to July, we saw a dip in government expenditure. That is expected to ratchet up quite fast from now on. And that will help the economy to start growing at a faster clip.
What's your assessment on foreign flows into Indian assets?
We are expecting that from February, as the new allocations come in, we will see a reversal in foreign flows, not only to India but also to emerging markets. Trump's stated policy is a weaker dollar to expect U.S. export competitiveness, to support U.S. export competitiveness. So we are expecting EM flows to start recovering from February as the new allocations come in. And we are hopeful India will get a good portion of that. On the MSCI Emerging Market Index, Indian stocks are getting a share of about 19%. So you can expect that 1/5 of the EM flows for stock markets should come into the Indian stock markets.
Mr. Baga, you've mentioned Mr. Trump a couple of times. Which sectors do you see will be at risk when Trump assumes power, considering some of his policies?
Yeah, the export-linked sectors from textiles to pharma to IT could face some headwinds from Mr. Trump's tariffs, which will get announced very early in his presidency. But the good thing is the market has discounted a lot of it already. So automobile parts suppliers, pharma, IT, textiles, gems, jewelry, leather exports, all the traditional exports and the engineering exports from India into the US could see a 10% tariff, and we could see a drag on them. Overall, what analysts are forecasting is that Indian GDP could contract by 0.3% if the 10% Trump tariffs are actually put across the board on all Indian exports. Over the last 4 years, Indian exports to the US have grown 44%. So the US is a very significant trading partner of India, and an across-the-board tariff of 10% would hurt this two-way trade flow.
All right, we'll have to leave it there. I've been talking to Mr. Ajay Baga. He's a market expert. Mr. Baga, thank you very much for your time and for talking to us today.
Thank you for having me. Thank you.
For all the latest news, download the WION app and subscribe to our YouTube channel.